All right, well, this chart of the day basically is supposed to reaffirm to you that the U.S. economy is not falling apart. It comes to us from the folks over at Bespoke Investment Group, and it shows industrial production year over year, the increase in that in the U.S., and also Fastenal's daily sales data. Fastenal, a company that kind of produces, what's in between the jet engine that is on your plane, right? Is on all different parts of the supply chain in the industrial economy, and they actually report sales on a daily basis. And the two charts right here show there's a pretty tight relationship between the two. Daily production, of course, is going to be daily sales. It's going to be a very volatile number. That's the pink line. But it's actually showing that things are fine, right? We're seeing growth at about 4-6% rate year over year. We're also seeing industrial production in the U.S. increase at about the same rate. And I think when we go back to the conversation that we were all having about the U.S. economy at the end of 2018, it was like, wow, things are really getting bad. We need to price in this recession. But the actual activity we've seen in the economy and the reading we've gotten from a variety of different manufacturing and services sector surveys have indicated that things are actually holding up pretty well. And you look at this chart, the oil crash was a much bigger problem for the industrial economy and Fastenal than the recent kind of volatility, the recent worries that were represented in markets at the end of last year. And I think a couple of things come to mind. The first is that the signs of recession continue to be few and far between. The second is that if we go back 3 years now in time, the economy was in a more fragile place, I think, than we remember it now, right? Donald Trump won the election, the stock market went up 50%, and we kind of all said things are fine because global growth is synchronized once again. That was the story second half of 2016, but end of 2014, all throughout 2015, we were talking earlier about the way the market acted, Andy, during that period, and the stocks really went nowhere. It was a very precarious time for the overall economy, the industrial economy, and I just think this is a reminder that we are actually in a fairly good place right now.
It's interesting because I was just having the exact same thought that you just articulated, Myles, that I had no remembrance of the fact that the economy was that weak in 2015 and maybe was hidden. And then my second point is that every time I see one of those charts, all I want to do is see what's going to happen over the next 12. I was like, Myles, can you just keep, but it's like, I'm so curious, and we're all so curious where that line goes. My bet was that it's kind of just going to keep dribbling along at the same rate.
Yeah, I mean, I want to see it continue as well, because you think, is that part there where it peaks and is not correlated very closely in 2018? Is that trying to get ahead of tariffs? Is there something, that we're seeing that then the line's going to go back down?
Again,
lower? I mean, there's more to come.
A daily data set, right? You're going to have some noisiness to it. But back at the beginning of earnings season, PPG, Fastenal, Caterpillar, these are companies that we were looking at and saying, watch these reports. And ultimately, the market was fine with what they heard from these businesses as it looked out towards the rest of 2019. Now, again, chart we highlighted yesterday, that said things kind of stink in the Chinese economy, and I think that's going to be a big story as we go forward. But looking at the U.S. domestic economy, great jobs report last week, more people coming into the workforce, the industrial sector continuing to grow. I think overall the domestic setup looks pretty good as we head into the rest of the year.